They were doing I think it was pretty new at the time, was I think it's a financial engineering program now, but at the time it was mathematical finance master's degree, and it was kind of a one-year degree. Had a big interest in math and finance and economics, so it fit in perfectly and allowed me to kind of stay in college for a fifth year. So it worked all around. But out of that, I left and went to New York, went to Wall Street. Well, actually Midtown, technically, I guess. Worked for CIBC and then Oppenheimer on the convertible bond desk. So doing sales and trading on convertible bonds, and all institutional clients. So again, mostly hedge funds. There were some mutual funds I dealt with, and some larger insurance companies that we did trading for. But again, it was on the convertible bond desk. So they call convertible bonds and drag. Or the Cadillac of investment vehicles. So it's basically an option and a bond is basically what you're looking at, tied to the company. Did that for about 4 years. Here's where my story kind of changes a little bit. I love the people I worked with. I love my clients. It was a fun atmosphere. But I kind of had been from sort of a manufacturing family. Always had a real desire to get back into a physical product. And I think I kind of, after 4 years on the desk in New York, I loved it, but I was like, I got to get back into manufacturing. I got to get into manufacturing and try it out. And so I ended up leaving. I went down to the University of Virginia for an MBA. So did that full time for 2 years. So that was good. And then I left there, graduated, and took a job as an internal consultant for Alcoa. What was Alcoa at the time? Did kind of strategy and operations consulting for him. Was in a rolling mill, so I got my kind of manufacturing stuff in a rolling mill in Lancaster, Pennsylvania. So right near you guys is a big aluminum rolling mill down there that produces a lot of different things. If you have any like clad products from Calphalon or whatever, like the tri-plaid clad inner products, a lot of that was made in Lancaster, the inner part, the aluminum part of it. So I was there for a little while doing an operations improvement project. And then I moved out to our R&D site. I guess it would have been 2015. And it was about a 400-person R&D site. Any scientist you can imagine, from surface chemists, a lot of metallurgists. I managed, and then I ran the innovation group there for a while, and then the commercialization division. So trying to commercialize new technologies, did some project management out there. Did that for about 4 years. The company split, Alcoa and then to Arconic. They were splitting again. Actually, great story if you're interested kind of in some of the more intrigue in the finance world and activist hedge funds. It's definitely worth it to take a look at what happened between Elliott and Arconic. It gives you a good perspective of how much personalities will clash at the boardroom level. It's a worthwhile story for those of you that don't know it and are kind of interested. And it kind of puts, I would say, it puts a more relationship spin on some of the finance. I think you do when you get into the numbers. So it adds that relationship aspect to it. But anyway, yeah, the company was splitting again. I had an idea for a manufacturing data analytics startup for small manufacturers. They were offering severance packages the end of 2019. I took it, and I've been working on that ever since. So small manufacturer data analytics tool. And I think I'm about to launch, assuming technically everything fits out, sometime in March. So kind of do a soft launch then. So kind of been working a little bit on the startup side. COVID also helped that. It was kind of nice to reorient myself and not be doing a job search during the middle of this. So we'll see how the launch goes. We'll see how many customers I get, and if not, I may be going back to the job market. But that's kind of where I am. So it's been an excellent career for me. I know you guys are finance people, but one of the things I would take away is that just because you start in finance doesn't mean your career can't end up anywhere else. So don't think of choosing. I think finance is great. It gives you great backing. I think the mathematics you learn in the master's program is excellent. Particularly, you may not like it now, but the proofs and the logic you go through to analyze things will help you throughout your career. But don't think just because you're in finance that you have to stay in finance for the rest of your life. So there's always a way out and always a way to get to somewhere else. So okay, so that's a little bit about me. I'll dive briefly into internships and stuff like that. So I did, let's see, my internship was with Group One down on the Philadelphia Stock Exchange. Between I didn't really do any finance internships undergrad, but then between my fourth year and my fifth year, I did, Group One on the Philadelphia Stock Exchange. They were doing options trading, options market making. So standing on the floor of the exchange with the market makers and the specialists. How did I get that? Is a great question. I think there was a little bit of networking involved. I think I had originally looked at Susquehanna. That didn't pan out. And then I looked at Group One, which was a little bit more of ragtag is not the right term. They're doing a lot of stuff. I think they're actually the main market makers on the VIX and the CBOE, but they were a little bit more freewheeling, and so kind of networked in with them. I think they were looking for a couple of interns. They ended up taking me and somebody else for the year or for the summer, and did that. I think it's networking was a big aspect of it, and then obviously, knowing your certainly knowing kind of your math and your delta, your Greeks and stuff like that. Particularly if you're looking to get in kind of that more specific options exchange stuff, understanding that and being able to know it on the fly, right? You don't have to know the perfect numbers, right? But what happens when Vega, what happens when vol increases? What's going on with theta? Stuff like that was important to know at the time. So that was internship. That was good. I did get an offer to return there. I elected. I kind of wanted to transition from market making and go try, what was going on Wall Street. I interviewed for a structured commodity position with CIBC. They liked me, but they passed me over to the convertible desk, so the sales and trading side, and ended up getting a job on the convertible bond desk. And it was just kind of, I guess actually I was technically in mezzanine structures, so kind of income trusts, MLPs, REITs, stuff like that. There was like 3 people doing that at the time, and there were these things so CIBC was a Canadian bank with the big American presence on the institutional side at the time. There was a lot of these interests in these Canadian investment trusts at the time, which ended up, there was a tax law change and they ended up going away. But they pulled me into that group, and that was part of the convertible bond group. I kind of transitioned over to the convertible bond group. A lot, I would say the initial, for me, the initial was probably not as much networking as it should have been for either role, both the internship and the job. But kind of once I got in, or once I started meeting people, building connections. So, I was 3 months probably on the income desk, but there was a convertible bond desk right next to it and associated with it. And I went to all those meetings, talked to all those people, really tried to understand as much as I could and learn as much as I could. And I think that showed through, and I eventually went to that convertible bond desk. Started out as a research analyst for a couple of months, and then ended up picking up some accounts on the sales side, and then really grew to a pretty big book of business. I mean, a few million. We were probably in the rankings for convertible bonds. We were probably somewhere around like 6, 7, right below like the Goldmans. I think we were ahead of like the Jeffries in terms of trading volume. But yeah, I was doing about $1 billion worth of trades a year. And it was a good, it was a good experience. I would say the interesting thing that I learned from that, kind of going back to how you look for jobs, is, you're picking up the phone, right? The guys on the other hand have billions of dollars of money to put to use. They're talking to you. They're trying to get some information out. They're trying to better understand what's going on in the market. Do they trust you or do they not, right? And that's all about the relationship. And so I would say, it's both when you're in the job and when you're looking for the job, trying to build up that relationship. And I know job hunting is not fun. I kind of took a little bit of a break this summer and kind of spent a couple months looking for a job to say, do I really want to do this? And I recognize it is not fun. It's been a while since I've done that. And my only advice really is kind of when you go into the conversations to talk to people, don't be looking for a job. Be looking to better understand what the potential jobs could be and what the companies could be. And that'll reflect a lot better than if you ever were to ask for a job. I mean, that is the one question you do not ask in a networking conversation is, do you have any job openings? Good questions to ask are, is there somebody I could talk to that maybe is doing a little bit more in this area? Continue to network in with the companies. But yeah, I mean, a lot of things still work on relationships, both in finance and in other areas. So yeah. So okay, so that was a long-winded. I know I put it there. So,
fantastic. Let me see if there are any questions for you first.
Mary, good afternoon. Assuming you're on the East Coast, maybe not. quick question.
He's on the East Coast. He's in Pittsburgh.
Yeah.
Pittsburgh. So taking the manufacturing route, I myself too am taking the sort of the AI route into the manufacturing space, specifically commodity manufacturing.
Yeah.
You have that MBA and you have this degree. One is kind of a Wall Street thing. The other one can kind of go anywhere, right? That MBA has applications everywhere. How do you, not on Wall Street, right? So in your manufacturing space, how do the two complement each other? Obviously, not one can't be better than the other, but kind of how does that dynamic play out for you?
Yeah, that is a great question, and I think it really depends on what you're looking to do and where your passion are. So I would say, you know, I've done finance, I've done manufacturing, I've done strategy within manufacturing, I've done some consulting, doing a startup now within the manufacturing space. I have a lot of breadth, but I don't necessarily have depth. And I think when you're looking at things, one of the things to keep in mind that I didn't really realize in my early career is do you want to go deep in an area and really understand it and kind of make a career that way, or do you want to be broad? And I would say the MBA provides that breadth and a kind of sort of base level breadth that some companies may be looking for as you move up. But to get that entry level into the door, I don't think you necessarily sort of need the MBA. And I think going the AI route, if you're interested in manufacturing, particularly the process industries and the commodity and more commodity industries that are. What you said?
I said that's exactly what it is.
Yeah, I would say I think a great starting spot is just to go in with that degree. And then, I mean, I did a couple of years of finance, right? I did 4 years of finance and then transitioned to the MBA. Getting that experience before is critical, I think. Not many MBAs actually will take you right out of college anymore either. So it's worth it to get some experience. It's kind of like a free write-off too. You can do whatever you want to with it, right? And then you go back to the MBA and everyone's like, oh, well, okay. Yeah, if your past makes sense, great. If it doesn't, you know, whatever, we don't care. So it's a good question. I think, yeah, one of the things to keep in mind is you develop your career, think about it, and it's going to be varied, right? It's never going to be a straight line. Do you have a passion in kind of a depth area, or do you want to try to be broad? I would say most people are going very deep these days, and I think that's what hiring managers are looking for too, deep. But it
yeah, so you decided to do your MBA after your Wall Street stint as kind of a way to move away from the specificness of convertible trading to like, now I'm going to kind of do my own thing, right? So I kind of need to understand everything. Is that kind of the reasoning behind that?
Yeah, I think again, it was really a pathway to get into manufacturing. Okay. I think, and the MBA is great for a functional or industry switch, right? If you're in finance and you want to stay in finance, it's not necessarily great because a lot of the stuff you're going to get going on. I mean, if you just like what you're doing and you want to stay vertical on that, the MBA doesn't necessarily make much sense. It's great for career switchers, either whether it's industry or functional.
Gotcha. Thank you.
Yep. One thing to note is a lot of the MBA programs do look at people that have master's programs very favorably because they know if you succeed well in an MBA or a master's program, statistically it's a lot higher likelihood of success in the MBA program. They do look at that.
Interesting.
So something to keep in mind, and I think you're well positioned if you ever did want to go back to get an MBA. So
yeah, I have a question. So just based on your experience, how does the skill set that you learned in Lehigh MFE translate into your current work right now, or like previous work?
Yeah, well, for me, I guess there's two aspects. You know, from a specific aspect, dealing with some databases and stuff right like that. I guess I actually did do some coding or optimization, and so I'm working on some of that stuff right now. So in the last year, I tried to pick up a little bit of Python, so it's been helpful to have done. It wasn't R at the time, it wasn't MATLAB, but it was some optimization tool the ISE department was using. So from a very specific perspective, that at least laid out a little bit of a foundation. But really, I think math provides a great framework and a great logical structure to think through things. It's excellent, really, when you're thinking about a strategy perspective too, to kind of be able to talk about that, about framing things out. If you ever look for a consulting job, people will talk about a term called MISI, which is mutually exclusive, collectively exhaustive. When you think through options, it's a term worth looking up because you may hear it thrown around if you go into consulting. But I feel like the mathematical background and the understanding and how you do everything related to math really provides a great framework and functional perspective in the mind. So a little more subconscious, I guess.
Okay, thank you.
Yep.
Mayor, I have a follow-up question.
Yeah.
So I'm interested in kind of some of this tech and manufacturing stuff. I think there's a lot of money to be made in that space, and relatively few people take advantage of it. Can you, if you can, kind of share some of the background behind the factory scene and kind of what's going on there?
Yeah, so I mean, I would say I'm going, yeah, so there's a broad market in terms of how you digitalize the manufacturing plant, right? A lot of large companies will have everything, you know, Alcoa, Arconic, you know, had a significant big ERP system, which is kind of your Oracle systems, had big MES systems, right, which kind of drove everything in terms of scheduling and planning across the factory floor. Right now, there's a big push from a lot of the large vendors to make it, you know, a digital twin of the factory, so you can run your product through before you ever know. And so I would say, you know, there's a lot going on in there. And then, you know, there's about a quarter million manufacturers in the U.S. alone. 200,000 of those are probably less than about 20 people. So a lot of small ones.
Yeah.
Most of those are running on Excel and stuff like that. And so I think there's some opportunity. So Factory Scene is really targeting bringing some simple visualizations, lean manufacturing tools to them. You know, a lot of the larger tools you need IT solutions for, and they require process changes. And every manufacturer kind of goes through some people will refer to as a knothole, right? Going from 5 million to 25 million is a big step. Going from 25 million to 26 million is not a big step. And so every time you take the big steps, a lot of times it requires new quality tools, new things like that. And there's a lot of opportunity, a lot of integrators out there to help with that. But typically it requires significant IT resources and process changes. And so I'm really just trying to overlay for the very small manufacturers a really simple solution. It is not a multi-billion-dollar idea. It is not anything amazing, but I have a passion around it, mostly because, you know, having worked in the manufacturing floor, a lot of times, you know, the people on the floor see something and the people in management level see something different, right? And trying to bring that alignment and communication together, I think is critical. And I think the tool I'm trying to develop tries to do that. I don't expect it to go, from a competitive perspective, I think it'll get swallowed up by something at some point, or other technologies will overtake it. But for the time being, I think it's an open market, and it's something I'm interested in doing. And it's, you know, it beats a job hunt, I'll tell you that much.
So is it focusing on the production process itself, or is it more focused on the sort of the management side, order flow, and kind of that communication?
Yeah, no, great question. Yeah, so I mean, we can talk in more detail a little bit after if you want to talk more. But yeah, it's really focused on the production and really just visualizations. There are a lot of technologies if you want to go really deep. I mean, there are 30, 40, 50 providers of different types of technology out there if you want to implement more IT tools, or you can just talk to a computer programmer right down the street that will put something in. But I'm just trying to do is kind of a standalone, simple tool that is cheap, effectively, better word. So.
Thank you for that.
Yeah, I would agree. I think there's a lot of opportunity out there. I think a lot of people are tackling it in different ways. If you IM me, or LinkedIn me, I can send you a bunch of resources about places to start taking a look where people may be interested.
Will do. Appreciate it.
Merit. I got a quick question. It's a little bit different now. I'm kind of just wondering about like the company that you started. Sorry if you already talked about, so I came a little bit late into the chat. But essentially, how did you go from proof of concept to prototype to testing on the market? Like, can you kind of walk me through, like, did you do in-house developers? Did you outsource some stuff? Like, how did you kind of get it off the ground?
I got a guy for $15 and myself. More again, you know, part of the startup when you got to jump into it is there's two ways to jump into it, I think, and I think I've done probably the worst way. One, you fail fast, right? And I think that's important. I have not done that more because it's a little bit more of a passion of mine than necessarily, like I said, a $1 billion business idea. And so I've taken a little bit of a slower approach, so I've been able to do some of the stuff myself. From a proof of concept and a customer concept, there's a lot out there, you know, talking to small manufacturers, understanding what the opportunities and obstacles are, really just talking to people. There are, in my space, there are a ton of subject matter experts out there. Those subject matter experts never seem to have actually done anything tactical from like an implementation perspective, but a lot of people to talk to. So yeah, it's a lot of talking to as many people as you can from a pure development side and creating a minimum viable product. But I just use Upwork, if you're familiar with the site. So, and I found a good developer in Ukraine that has been good on the front end, and I forced myself to learn on the back end. So.
All right, you guys, thanks.
Yeah.
I got a quick question. Thanks a lot for the presentation. I mean, I think you've had a very varied career spanning a lot of areas. Just outside of the networking component of it, what aspects would you say have helped you stand out across the board? And I think I asked this from a context of somebody who's probably going out of university, some of us who are starting their careers right now, and
Yeah,
I'm curious to say at the different nuggets of your journey, which parts would you say have been important? Did you have to pivot, stuff like that?
yeah, it's a great question. I mean, I think, kind of when you look at it, I think, sorry, people hire for one of two reasons. Either they're looking for a very specific skill, right? And they're like, I need a designer. I need one that can do CAD in this system. I need to hire him now because I need a need for him, right? The other one, and honestly, the more traditional one, probably the one you want to go to early in your career, is a person that hires for capability and recognizes nothing coming in. And finding those programs and those people who want to hire kind of for that early stage. So whether that's like a leadership development program or something along those lines, but making sure that who's ever hiring you is not hiring you for very specific skills you have, but with the expectation, but for who you are as a person and how you can grow. And so when you kind of look at when you try to translate that into, okay, well, that's great, but how do I get in the front door? The resume is a big part and the interview is a big part. And being able to show kind of, either leadership skills, things you've taken initiative on, things that kind of demonstrate growth in learning and growth in leadership and growth in skills are important in some of the stuff I would look to. So, I always tried to hire, when I was a division manager, I'd have my managers were hiring people and they would know from a technical side what they wanted, right? But at the end of the day, some of the decisions when we had two people, it really came down to who do we think can grow into the role and then grow beyond the role, right? So I don't know if that's helpful for you. I know it's difficult kind of coming right out. But again, I think people either hiring for skill, and usually a combination of both, but think about in your mind that the person is either asking for pure skills, right? Or they're looking kind of more for a personality or growth, the ability to grow. So that's been my experience, at least, on both sides, both interviewing and hiring.
All right, thank you very much.
Yep.
So maybe what we could do now is we could have the students tell them a little bit about their projects.
Yeah.
So you could see, and who knows, maybe you could have something they could work on at some point that could help you in your business. So who wants to start with their project? 5 minutes or less, obviously.
I mean, I could go first.
Yeah, Michael, Metzela on the.
So I'm working on two projects. One is Inca Digital, and then the other one is with Ethereum Classic Labs. So pretty much with Inca Digital, we're using proprietary one of their softwares called Splunk, where it gives you sort of it's a data aggregator. So you pretty much get a bunch of all this blockchain data, and the overall perspective of it is a matter of trying to understand what's underlying there. My key area of focus was pretty much looking at the cryptocurrencies and saying, can we classify this as an asset, specifically focused for the emerging markets where you have a lot of investors searching for yield, right? And with the current bond yields across the board just haven't plummeted, we have a lot of people getting scammed up in a lot of stuff. And I was like, what attributes of this can we what attributes of the current crypto space can pretty much be able to validate an extra sort of yield for some people? So that was that's one project. And then the second project, which my colleagues will also chime into, is the Ethereum Classic Labs. With Ethereum, we're pretty much trying to understand the underlying data structures of Ethereum. We're trying to build a state analyzer or a data analyzer of the Ethereum ecosystem, where the end product was supposed to be a Python sort of library to analyze this. I think the great thing about the Ethereum Classic Lab project is that it's very varied, because it's pretty much learning about new technology, which I think even in manufacturing can be useful. So I'll let Brian and Steven chime in on the Ethereum part.
Yeah, so Steven's not here, is he? No. So in essence, and I'll just transition into the next kind of the other thing that we're working on. But so with Ethereum, we're kind of the vast data set that you would expect in a blockchain ecospace. We're kind of seeing, right, can we connect the relationship? Is there a relationship between players in the market, so data on who's trading, what's being traded, when it's being traded, how much is being traded, et cetera, to expected returns of a specific coin. In essence, we're trying to extend a traditional factor model into now this new up and coming market. You see the banks are starting to just pile on coins, right?
Yeah.
So in essence, is there a finance argument behind all this, or is this just a bunch of computer science people trying to outsmart us? That's kind of at least my take behind it is there money to be made, right? At the end of the day.
Yeah.
Is there an arbitrage, is there an alpha opportunity? And so kind of into that, Jordan, who's on the call as well, he kind of brought the idea of investigating the traditional Fama French 3 and 5 factor models that ended up winning a Nobel Peace Prize back in the day, right? And today, not necessarily all the banks are running after, the textbook version of that model, right? But we see every bank is pretty much using some strategy that involves a factor and a combination of factors specifically. And so our take is to say, right, Fama French won the Nobel Peace Prize. That's great. But it's a linear model. It's just a bunch of things added and multiplied together. We know that stocks don't move that way. Returns don't move in a linear pattern. They're erratic. They're all over the place. Is there a modern AI solution to kind of capturing that noise that we're seeing? And so what we're investigating is there an AI approach to kind of understanding those anomalies? And then using those estimations from those AI solutions, right? Can we create more stable, and in other words, can we create portfolios of assets that are predicted using those solutions to get more stable returns in the portfolios that we select?
Okay.
Jordan, I'll let you add on to anything to your own project there.
Yeah.
I mean, you pretty much summed it up great. I would say that's 95%. The idea is that like the CAPM is what's used in industry and academics. It's flawed compared to Farmer French because it has greater prediction power. So we're just taking one level above that, and we're saying, why aren't we using common machine learning and neural network protocols to do the exact same thing, just at a better pace? So, and then we're optimizing these output factors given certain constraints.
Okay. Interesting.
Jack, about and company, what about your interesting project?
Yeah, we've got kind of a fun one, in that it's kind of a new and like out of the box space, but sports gambling is obviously something that's being legalized across the country, state by state. And now that it's now that it's not as underground, you can better investigate it in an academic sense, I guess. But essentially, what we're trying to do is develop a strategy, an inter sports book arbitrage trading strategy, if you will. So
yeah, that's a great idea. It's because you run into the regulators right across state lines, right? So like everybody in Pittsburgh's betting on Pittsburgh to win, right? They got to try to lay that off, right? Either by the spread or by what, right? Like either they're moving the spread so they're evening out their odds and then just taking the vig on it, or they're trying to lay it off to somebody. But when Pittsburgh plays Philadelphia, it's a mess, right? And they can't lay it off.
Yeah, that's the idea.
They have a hard time laying it off. Yeah, I mean it's a great idea. If you could, I mean I think that's a great opportunity. I think the sports books need to fix their apps too. But in fact, I don't really do much. I just go to if I want to bet on the Super Bowl, I'll go to the casino. But
yeah, I got you.
I don't really do, I don't do it much. But that was one of my first thoughts, is like just hearing about like this, the lines are moving so poorly, and you can't get a good arbitrage there.
Well, what we've actually found is, and we've done some scraping and off of different odds sites, and trying to see where we can put books against each other, and we're actually we're applying option spread strategies to them, and they actually apply very well. Like we found a couple examples of box spreads, for instance, butterfly spreads. We've also found within it, and we're trying to develop our strategy such that we're considering empirical data and whatnot to try and pick which spreads we actually want to take as they present themselves. And what is kind of like, it's a tough game because the instead of it being like in an equity market where like you're going to lose a couple of a tenth of a cent on every trade, like it's more like $5 per $100 position because of the way the books are structured. But we've definitely found a couple examples of a lot of money on the table that the books leave out there just because between each other. It's not really we're not trying to like what's that?
Yeah, I was going to say, and in terms of betting strategy, do you guys still read the small like blue stochastic calculus book with the Kelly betting strategy?
I'm not in that class.
You're not in, Patrick, do you know what I'm talking about? It's a small like blue book. It talks about pension fund returns and stochastic calculus and stuff like that.
I think they've done away with it.
No. It's a small book. If you want to wait around, I'll run in and grab
or maybe
it.
not. Jordan, do they still use it?
No. Benjamin held up the book we used.
If you give me 30 seconds after we talk, I could run and grab it. But look up the Kelly betting strategy for horse racing. If you have an odds in your favor, there's the guy did the mathematical calculations of what and you guys are much more advanced than I ever was. But if you go in, it's fascinating to read about if you have odds on a horse race that is better, how much you should bet. If you have over 50% odds, it's worth it to look up. It may apply to your strategy. I think that is a very cool idea.
Well, definitely.
Sorry, Jack, you go.
No, I looked up and pulled it up. Sorry, Michael's also on the project, and he knows a little bit more about the data side, the empirical data side. I don't know if that was what.
Yeah. So the idea is that the books are so accurate that if there's a difference between the books, the true predictive number is probably in the middle. So we're not like exploiting one book, we're exploiting the ecosystem of all the books together. And so, and they put more focus into like a Super Bowl line or the big game lines, but what we're looking at specifically is prop bets where they're a little bit less mainstream, they're a little bit more under the radar, and we're actually finding that there is some arbitrage opportunity there.
Okay, so we should probably move on to a different project, but one of the things you actually may want to kind of going back to the comment about relationships is at least the Pittsburgh Rivers Casino or whatever. I mean, these guys were pulling in people from Vegas in terms of setting their odds, right? And a lot of them have left. It would be interesting to see what happens when the odds maker leaves, what happens to the odds and if there's an advantage there. Right, when they get a new one in and when the guy leaves, right? Because those guys are setting the odds.
Unfortunately, though, they're just so secretive. It's really hard to understand how they're doing that.
Okay.
So we figure it's easier just to let them be secretive, and then we'll just make them play each other instead of us playing them.
Yeah, that's fair.
So
that makes sense.
Yeah, they don't even they don't let you scrape from their website, so we actually have to go through a third party to get all the data.
All right. Cool idea. Good luck.
Thanks.
Great. Okay. So